I live in San Diego. Barrier of entry is significant.
Absolutely, yeah.
For me to cash flow in San Diego, it's not long-term rental.
Yeah.
It's short-term rental, and I have a short-term rental, and it's done well for me. That being said, I like the idea of cash flowing in the Midwest. That's where my access, if I was just by myself, is minimal to none, to be frank, right?
Yeah.
And that's where you and I had partnered the idea that, hey, you're here in the Midwest, you have access, you have contractors, you have all the infrastructure in place. And we on the West Coast maybe have some more capital to dump into the Midwest, things like that. So that's where the combo have come together. Finding out where your infrastructure is where 100% is the starting point for me.
What's one thing when you're looking at a new market from a data perspective, what's one or your top 3 or 4 things that you look at in regards to, hey, I'm looking at this map of the United States. What should I be looking at to determine what market I go into?
Here we are.
Hey, how do we start these off saying hello?
Hello, how are we doing? What's up? Today's the day.
My name is Mark.
Hey, Adam Rare here.
And we are Cherry Pick Capital?
Cherry Pick Capital.
Yes, sir.
Yes. Well, let's just get the elephant out of the room. Listen, what had happened was I was helping an elderly lady across the street, as one does, like, hey, let me just make sure that she's going to be okay. Helping her along the way, and all of a sudden a car came by. Man, almost hit her.
What?
I throw her out of the way with my massive strength.
Yeah?
Yeah, and I tumble roll out, but listen, what had happened was...
Tumble roll?
Yeah, I tumbled out of the way of the car, fortunately.
Yeah.
But, however, I did get hit with a side mirror right there, square in the forehead.
What'd you say?
Square in the forehead, right there. Yeah, see what had happened.
Super distracting.
Yeah,
you mean your third eye? That's how you grew your third eye?
It looks like Harry Potter, but horizontally.
Yeah, it looks like an eyeball.
Eyeball?
It's just closed. It's sleeping. you got two eyes. You got 2 eyes awake and 1 eye sleeping.
Why are you licking your lips as you say that to me?
Your brain.
Well, that looks good, huh?
Your brain's at third capacity.
Man, wow. So anywho, here we are now.
Good luck, bud.
Yeah, so we are going to talk about outside of my forehead and what's going on here with saving the elderly. Let's talk about how to find a market. And you're not always subjected to where you live today. I think, naturally when you're first looking at real estate or whatever, it's always in your home market, which I think has definite advantages for sure, 100%. But a place like where I live, for instance, San Diego, your barrier of entry is significant. So how would we, and how do I, and how have we in general in the historics, gone out, analyzed markets, and understood, hey, we're going to go after this market for these reasons, and then go execute. So that's really the topic of the day today is how we determine a market, why we've picked what we've picked within the Midwest, and then just in general for people listening, some of the big pieces of the puzzle to make sure that you can put into place and analyze correctly before you sink your teeth in.
Yeah, absolutely. I think you definitely need to dive as deep as you can in the local market that you're in before you consider going outside of your market. It was, and it still is to a certain extent, a buzzword. It's like an ego type thing, sexiness, like, dude, I'm in multiple markets right now. I'm in this one, where in reality, you got to dive deep into your own market before considering going elsewhere. Majority of the time, if you're thinking, hey, I need to go into this other market, there's probably more deals to be had in your own market before you go out elsewhere.
Sure.
But like you said, for markets like San Diego, San Francisco, places in California, or ones on the East Coast, or wherever, Southwest, it's there's certain markets where the price point to get into a deal can be 7 figures, and compared to the Midwest, where you can get into something for a low 5-figure range. So exploring other markets and knowing what to look for is definitely something that we'll dive into. There's a lot of different things that will come up that you may not think of up front. We've gone to different markets, me and you have on your own.
Sure.
I have outside of you. So we'll be talking about some of the stuff that we learned going into new markets and some of the stuff that we wish we would have known beforehand before we explored going into that market.
Yeah, absolutely.
Some questions to dive into a bit when you're looking at expanding to a new market or just looking at a market period. Infrastructure is one in regards to your available resources, if you want to dive into that a little bit.
For starters, I think about who I know and what pieces of the puzzle I already have solved. I always go back to it's my engineering mind of breaking down a larger problem of how do I get from A to B and what are the pieces to get me to there. And so I talk about puzzle pieces oftentimes because that's the way my brain works. And
like Legos or puzzles?
Puzzle, yeah. Although I did like Legos.
You're more of a puzzle guy?
Yeah. Anywho, so the idea of having different puzzle pieces to get the full picture together is the way that I describe problems, because it starts to make sense to me that it's like, hey, I need these 10 pieces to get to the end solution, and now I have 5 figured out. So the idea of infrastructure is important because if you're starting into a fresh market, for instance, you got to figure out who are the contractors in the place, who are your brokers, or how do you go find a good deal? How do you analyze a good deal? How do you understand that the rents in that market are going to be good? All of those things start to add up. And now you're thinking about, okay, where is my infrastructure? So when I'm thinking about it, first stop is home base. Home base for me is where I live. So is there a way for me to maximize my area? Is there an opportunity here where I can cash flow, I can create income, all of those things? Second piece, so I live in San Diego, barrier of entry is significant.
Absolutely, yeah.
For me to cash flow in San Diego, it's not long-term rental.
Yeah.
It's short-term rental, and I have a short-term rental, and it's done well for me. That being said, I like the idea of cash flowing in the Midwest. That's where my access, if I was just by myself, is minimal to none, to be frank, right?
Yeah.
And that's where you and I had partnered the idea that, hey, you're here in the Midwest, you have access, you have contractors, you have all the infrastructure in place. And we on the West Coast maybe have some more capital to dump into the Midwest, absolutely, things like that. So that's where the combo have come together. But finding out where your infrastructure is where 100% is the starting point for me. Where is, I'll call it low-hanging fruit. Where are your low-hanging fruit? What have you figured out? Who could you lean on? Do you have friends, family, cousins, whoever that is, to be able to open up some doors for you? Or are you just starting a completely fresh market? So that to me is item number one. Before any market research, before any other things, that really is an important piece.
Yeah, I think even to take a step back a little bit though, is when doing the market research, defining what you want to do in real estate to get to the basics is,
that's true.
Do I want to do fix and flips? Do I want to do rentals? What do you want? Do you want to be passive investor? Is one, identifying what strategy you want to go after. After a while, after you get into real estate and you've got the business set up a little bit, it's super easy to incorporate a lot of different strategies into your business. But really, if you're looking into a new market and you're newer into real estate, you got to go into the mindset of, hey, what do I want to do first and foremost? And then two, how's that market fit this needs? And then that also kind of leads into, one, have at least a couple exit strategies when you're getting into a deal. So sure. When you're analyzing a market, a lot of people may start off with wholesaling per se, because it takes very little money to wholesale. But again, to have multiple exit strategies, you could also be like, hey, in this market, I want to wholesale, but if shit hit the fan and I had to hold on to this property, how would this thing perform as rental? So that way, when you're going into deals, you can look at deals from a different perspective, because you know, hey, it hits this criteria, it doesn't hit this. If I get into this, I know I have these other exit strategies if need be. So market research, I think, often depends on what you want to do as a real estate strategy overall. Yeah,
that's a good point, because I brought up San Diego. I'm not doing long-term rent in San Diego.
Yeah.
But I'm doing short-term.
Yeah.
I love the idea of flipping in San Diego. My short-term rental was essentially kind of heavy renovation into a short-term rental. that strategy is different than what we're doing in the Midwest.
Yeah.
Right? Like
Absolutely.
we're looking to go and do long-term rental in the Midwest. The short-term rental, the market's not there. Long-term rental, it is. And then you look in San Diego, and I'm not going to cash flow with long-term rental.
Not close.
But I love the idea of flipping as well. So like we're going to go after some flips.
Yeah.
So thinking about the overall strategy is an important part of how you're analyzing a market and what you're going after and why, right?
Yeah, absolutely. What's one thing when you're looking at a new market from a data perspective, what's one or your top 3 or 4 things that you look at in regards to, hey, I'm looking at this map of the United States. What should I be looking at to determine what market I go into?
Yeah, there's a wide range of factors. For starters, I'll call it barrier of entry. So what's median cost of a house? What are you looking at? What's the median cost of rent? What is that margin there? And that starts to pull together a picture around that's a good deal for me, what my strategy is, what you said at the beginning, right? My strategy, for instance, I want cash flow. I want to see money coming back to me. I want it to be able that I'm already paying my mortgage and expenses and I'm still cash flowing. Well, that starts to dwindle my markets now down to things that I can look at market rates, what an acquisition cost is, what interest rates are, and build out the story of, yeah, that starts to make sense, or that will never add up.
Yeah.
And I brought, like at the beginning, right? In California, very, very difficult to cash flow on buildings, but your appreciation oftentimes is significant.
Absolutely, yeah.
And some strategies, some real estate investors really bank on the idea of appreciation. I like the idea of cash flow, and no matter what happens in the market could go down 20%. I don't care. I'm not selling. I'm going to continue to make money. I'm going to continue to cash flow. And when the market comes back up, I'm in a great position to do it. I'm not worried about it. I'm still cash flowing based on my income, my expenses, my mortgage, things like that. So that's a big piece of it. The second piece is really economic growth, demand in the area, jobs in the area. So I kind of relate all of those 3 together.
Yeah.
So I don't know, maybe you can touch on how we've found that data historically, what you look for, and what is maybe I'll call like a sexy market based on that, right?
Yeah. We utilize, it's called the internet. I don't know if very many people have heard of it.
Oh.
You go on your computer and you can access the World Wide Web, like WWW, people call it for short. On the interwebs, though, is all sorts of free information. And you think about it back in the day, 20, 30 years ago now, when you're doing research on a market, would you get, I'm kind of asking this, because I don't know, would you get an encyclopedia? Probably not. Or where would you go, the library?
I wasn't analyzing deals 30 years ago. I would have been 4 years old.
So that does not help.
Yeah,
for answering
you would have been
question.
9. So yeah, so were you analyzing deals? That's pretty impressive.
Yeah, thank you. Yeah.
Man, you've been slamming deals that long.
It's
God, picked a good partner.
Yeah. But yeah, before the interwebs, like nowadays, so much free information online. There's a ton of websites you can subscribe to and get really in-depth data on population growth and jobs and who the big employers are in the area and whatnot.
Yeah. Even ChatGPT will spit that out in-house.
It's pretty gnarly. That's almost a whole different episode for us to record, is what Chat's doing to change the landscape of real estate, really. One thing for me was talking to lenders in the area of, hey, I'm interested in this market. I'd see who the banks were there, or I'd do some networking to find out different lenders. And then from them, talk to them. Those guys are on top of what's going on in the local market, how the economy's doing, the things that they look for in regards to, hey, I'm going to lend on this asset, and hey, this asset may be where we're located, or this asset may be out of town or out of state. And if it is out of town or out of state, what do they look for in the market that they may potentially lend in? So I've always historically have leaned a lot on what the lenders look for in certain markets, and then from that I'll go onto the interwebs and also research. To me, population growth and jobs is huge. So we've invested out of state. And again, going back to what I just mentioned a second ago, is the lender was asking, hey, we were looking at an apartment complex in a different state. And the first thing the lender said, hey, how's the economy doing there? What's the population like? Who's the big employers? So before they ask you that question, that should be something that you should be able to go in and research. And then that way you're ready for those questions to come up. But jobs is huge. So if we're going to buy an apartment in, let's say, Iowa, and it's 100 units, well, hey, these 100 tenants or 100 plus tenants, what's the common job in that area that they may come from? And from there, you kind of backtrack, hey, so these jobs in the area, what's their average pay? Is their average pay?
That's an important one.
Minimum wage? Is it $25 an hour, $30 an hour? What does that look like? And then
is it growing? Right?
Is it growing? And then from there, it's like, okay, average pay in this area is this. So can they afford, if we try to charge $800-900 for this apartment, can the average person in this town afford that, or can they not? So really diving into that stuff.
And opportunity for growth. So the reason why some of those hubs within California is much higher than other hubs within California, for instance, I speak on behalf of California, right? Like I've been living here
Mr. California.
Mr. Worldwide.
Yeah, no, just Mr. California.
You think about the Bay Area in particular, San Francisco Bay Area, LA, they have historically been more expensive than San Diego, for instance. And I always look at this, man, this is crazy. I could live at the beach for what I'm buying a house like in downtown San Jose for. This makes no sense for me as a like cost of living and livelihood and things like that.
Which was a real life scenario.
Yeah, I ended up trading a house in San Jose downtown for a house at the beach. It's like, man, this is a great trade. I'll take this all day.
Yeah.
But the big thing is jobs. San Diego did not have the high paying jobs that the Bay Area does or LA does. And LA is only, hour, 2 hours away. So you think about it in that light, and it really is an impact. It really is how your investment is going to make more money, is if you have jobs in the area that are paying well, stable, and going to continue to grow. They're going to want to invest in housing that they want to be in. They want to stay in somewhere safe, secure, happy, all of those things that make a big difference.
Yeah, and it makes me randomly think about, I've invested in smaller markets in rentals to where done all the studying of the data saying, hey, this is affordable rents in this area. Mm-hmm. But if the population growth is stagnant per se, and where there's not a ton of jobs in the area, even though you could rent out a unit for, let's just say $800, sometimes in this market I'm talking about, it could take 2 or 3 months for you to find somebody that's willing to pay that $800.
Yeah.
And when you think about it, having that unit sit on the market for 3 months, you have 3 months lost rent at $800. That's $2,400 that you've lost out on until you find that tenant. That's a big thing to look at too, is, hey, how quickly can I rent this out? Are we attracting a lot of new people to this area to where when rentals come up that they can be leased out quick? Or is it something that's hey, it's stagnant, there's not a lot of people moving in here, the people that are moving from one house to another, or from one apartment to another? So if they're moving from one apartment, let's say, to your apartment, why are they moving apartments? Like, are they getting kicked out, or what's going on?
Yeah.
That population growth and jobs is, again, to reiterate it, huge if you're looking into another market, especially for rental properties.
Yeah, absolutely. And then you think about that time, $2,400 over that 3-month period, right? If you had just dropped, let's say, $40 a month and it got it rented, that's significant, right?
Absolutely, yeah.
You'd end up with 80 months of trying to make that up.
Yeah. Yeah.
Right?
Did you do that math in your head?
There it is.
Holy smokes, a mathematician, huh?
80 months. So the fact of it sitting vacant is so significant.
It's huge.
And picking that right time or that right dollar amount that ends up maximizing your rent, but also making sure that it's rented as effectively and quickly as possible is really important.
Yeah. So what do you think some ways, if you're looking at another market, how you can mitigate certain risk going into other markets?
So for starters, the ability to have a resource there is always advantageous. Me picking a place in Montana that I know no one, I have no infrastructure, I'm starting fresh, you really got to have a rationale as to why. I love this market because XYZ, and I'm going to spend the next 10 years in this market. Like, you got to commit and you're going to be there for a long time.
Yeah.
Otherwise, it's like, why did I just set up all this infrastructure? Because you're going to have to go from ground up and you're going to have to set up the infrastructure. So for me, is an important piece of just where I would start. I start with my network. I start with where I could be and why that's better than somewhere else within my existing network. If none of those fit the bill, I'm going next to analyzing markets, analyzing studies. What is a low barrier of entry along with high income that I can cash flow? That's an important piece. And then building my infrastructure from there. But I recognize that now from there on out, I'm spending a good chunk of time to build my own infrastructure. I'm flying there. I'm going and building out the team that's needed to be able to support my real estate business. So that's an important piece of risk mitigation. Understanding what's needed, and then going out and finding the right folks to get it done. Because you're not by yourself. You're going to have a team.
Yeah. And committing to it. It's not, hey, I identify this market.
Yeah.
I give it the shot. I
bought 2 units and now I'm on to the next unit.
Yeah.
No, I'm analyzing it like I'm going to buy 2,000 units in this market.
Yeah.
And
especially to establish good relationships with contractors, banks, things like that. Mm-hmm. You need to be doing a decent amount of deals and not just doing all this research just to go in and do a deal and that's it.
Yeah, absolutely. Oh, that was fun. Now let me go try this other one because I heard it could be better. No.
Yeah.
You're in. You're committed.
Yeah, chasing shiny objects is one, I think, what leads some people to go into a new market because, hey, this sounds super sexy. I want to go and do it.
Yeah.
But then two, it's one of those things to where just need to stay focused and say, hey, I'm going to commit to this. And even giving yourself, hey, I'm going to commit to this for 6 months. I want to try to achieve these goals in 6 months. But if you're just, hey, I'm into this to do a deal or two, that's not really the reason to look to go into other markets.
Yeah. Sit there, focus, crush it, then just keep crushing. So don't go into another market yet.
Easy peasy,
right? Yeah,
so
exactly. But that is how we look at markets. People have asked us, how do you look at market? How did you end up in the Midwest? How did you end these things? And these are things that we have consciously decided we're not going to go after boiling the ocean. We're going to go to home base. We own and operate real estate within Omaha, Nebraska is home base for us. We'll go to Des Moines. We'll go to Fort Madison, Iowa. We'll go to Council Bluffs. We'll go and continue to expand it from there. But that's home base and maybe a bullseye for us, and we'll continue to expand. And then for me being in San Diego, I love the San Diego market. I'll continue to grow the San Diego market, but in a different strategy than what we have here in the Midwest.
Absolutely, yeah. So what do you think the takeaway is from what we chatted about? One takeaway.
I think I'll call it start with your strategy. Start with what I call your bullseye. This is a sweet spot for me for these reasons. I know these pieces of the puzzle, these individuals that can help me to get to my solution. So I would call it start with your bullseye, and then you can grow out from there. But what is your strategy? What do you really want out of a deal? You want to flip? Okay, that's a different strategy than I want to buy a place and hold it for the next 20, 30 years and pass it on to my relative, whatever it is. But that's a very different strategy, a flipping strategy, than a long-term rental strategy. And so getting clear, very clear on your goals, your aspirations, is very important, and that would be the key takeaway.
Nice, bud. Did good.
All right.
Did you say anything during this podcast? I got distracted by your third eye, and I'm sorry. Did you say something?